Namaste. Now we are going to discuss about the next concept, debenture interest concept of periodic payment. Please remember, debentures are issued with the condition that interest will be paid at specific intervals irrespective of the financial position of the company. Fixed interest will be paid irrespective of the financial position of the company, and the interest is payable monthly, bi-monthly, quarterly, half-yearly or annual. But most of the companies will pay interest half-yearly, which means the company will pay interest once in 6 months. Now the interest may be paid depending upon the date on which the debentures are being issued. If the debentures are issued on 1/4 of a year, then interest is payable on 39 and 31/3 of the subsequent year. 6 months case. But we cannot expect the company to always issue debentures on the 1st April. Not necessary. Whenever the company is in need of funds, the company is going to raise. Which means the company may issue debentures during the financial year. In that case, the date of interest will not be the same as date of closing of books of accounts. In which case, the interest will be recorded as interest accrued but not due. How are we going to disclose the interest concept in the financial statements is going to be our discussion now. Now, when the interest is to be paid, interest will be paid once in 6 months. The company is expected to deduct tax at source and remit it to the income tax department. Payment of debenture interest will be half yearly, but tax will be paid at the end of each financial year. Though tax concept is not there in the syllabus of class 12 CBSE now, the concept should be learned. You should know how to treat tax payable. So, there will be 2 entries for every half year. Entry number 1 is for making the interest due. Entry number 2 will be payment of interest and tax to be deducted. Year end, the same 2 entries will be repeated. Along with that, 2 more entries will be passed. The 3rd entry will be for payment of income tax to the government, and the 4th entry is for charging debenture interest to statement of profit and loss. So, the accounting entries will be, apart from issue entries, we will be passing the entry as in the half year. In the half year, 2 entries will be passed. Entry number 1 will be -% debenture interest account debit to -% debenture holders account. And if there is tax payable, then you will deduct tax and create a liability for that as tax payable account. So, you are creating a liability. So, debenture interest made due along with tax payable. Number 2 will be -% debenture holders account debit to bank account, being interest paid. These entries will be passed twice. Whenever interest is paid, these entries will be passed. Now, at the year end, along with these 2 entries, you will pass the 3rd entry to be income tax payable account data at the year end. You pass the entry as, this is the third entry, along with the two entries. The third entry will be income tax payable account debit to bank account. That is for tax being paid. Then the fourth entry is for charging debenture interest to statement of profit and loss. Statement of profit and loss debit to debenture interest account. Debenture interest charged to statement of profit and loss. So these four entries will be passed at the end of the year. Now, in continuation of this, let us discuss about how are we going to deal with debenture interest in the financial statements. In the financial statements, in the statement of profit and loss, in case if the interest is already paid, then it is a part of finance cost. So, under the heading finance cost, you will mention in the notes to accounts and discuss everything. In the notes to accounts, this 1 will stand for debenture interest that has been paid during the current year. The total interest, irrespective of whether tax is paid or not, total interest is a charge against profits. Therefore, it will be debited to statement of profit and loss. How are we going to disclose it in the balance sheet? Please remember, disclosure in the balance sheet will happen only when the interest is not yet paid. Disclosure in the balance sheet will happen only when the interest is not yet paid. So, in the financial statement, in the balance sheet, suppose interest is not paid, then it will appear as interest accrued but not due on long-term loans or long-term borrowings. It will appear under current liabilities. Under current liabilities, in notes to account, we will mention about interest accrued but not due. What do you mean by interest accrued but not due? That means the money is to be paid, and since we are following accrual concept, it will be recorded in current year's financial statement, though the payment will be made only in the subsequent year. For example, debentures issued on 1st January. So the interest is payable on 30th June and 31st December. Now, 30th June interest to be paid means for the first 3 months, that is January, February and March, the first 3 months belong to the previous financial period. The subsequent 9 months will be in the next financial year. So, that being the case, what happens is the company is not going to pay interest for 3 months. The company is going to record it for the current year, but the payment will be made only on 30th June. That's why we call it as interest accrued but not due. It is not that the company is yet to pay the money. The company will pay the money only on 30th June. So, it is called as interest accrued but not due on debentures. So, in this concept, we learnt about debenture interest concept of periodic payment. Debenture is a liability to the company, long-term borrowing, which carries a prefixed rate of interest to be paid irrespective of the profitability of the business. Debenture interest is a charge against profits. It will be debited to statement of profit and loss under the heading finance cost. Debenture interest is normally payable on a half-yearly basis. It can be a monthly payment, bi-monthly or a quarterly payment also. But normally in practice, the companies make interest payment once in 6 months. And when the interest payment has to be made, the company is expected to deduct tax at source and remit the tax to the income tax department. Now, when the company makes the payment of interest, the company will create a liability called income tax payable account, which will be showing a credit balance until the year end. And the year end, we will make the payment of income tax to the government. Tax concept is not there for the examination purpose in the present 12th curriculum. But concept should be known because we know pretty well that debenture interest is a taxable income to the company, expense to the company. Therefore, that amount has to be deducted, tax has to be deducted. And in case if the company is issuing debentures on any other date other than the financial year, the time lag between the time at which the debentures are issued and the time at which the books of accounts are closed, the debenture interest will be calculated under the head interest accrued but not due, and it will be disclosed in the balance sheet of the company under current liabilities. This is the concept of debenture interest periodic payment. The next concept we are going to deal with is about the treatment of loss on issue of debentures or discount on issue of debentures. When the company issues debentures at a discount and redeems the debentures at a premium, the company suffers losses. The situation may be the company issues debentures at a discount but redeems at par, or the company issues at par but redeems at premium. In these cases, the company suffers loss only once, either at the time of issue or at the time of redemption. But the company will suffer double loss when the company issues debentures at a discount and redeems the debentures at premium. Any case, the company has to write off such losses. The company cannot retain the loss and disclose it in the balance sheet. Companies Act amended in 2013 does not permit any fictitious asset in the balance sheet of the company. A company has to write off the capital losses in the year it is incurred. So, when the company issues debentures at a discount, the company has to write off the discount in the year of issue itself. Similarly, when the company commits to mete out the premium on redemption of debentures, that also has to be written off against the accumulated reserve in the year of issue itself. So, the accounting treatment of loss on issue of debentures or discount on issue of debentures will be such loss will be written off against number 1, the balance available in the securities premium reserve. Please remember, the provisions of securities premium says that the company will use it for writing off of capital losses. So, the company will use the amount available in the securities premium reserve to write off discount on issue of debentures or loss on issue of debentures. In case if the amount available in the securities premium reserve is not sufficient to cover up the discount on issue of debentures or loss on issue of debentures, the company may use the amount available in capital reserve or any other accumulated reserve. In case if such reserves are also not sufficient to cover up the discount on issue of debentures, then the company may use the current year's accumulated profits, the current year's balance of statement of profit and loss may be used for writing off of discount on issue of debentures. Such accounting treatment will be shown as a deduction in the balance sheet under reserves and surplus. So, now we shall be learning about the journal entry for writing off of discount on issue of debentures or loss on issue of debentures. Then we shall be opening discount on issue of debentures account or loss on issue of debentures account. So, what journal entry are we going to pass now? So, we are going to pass it as securities premium reserve account debit or, it's not or actually speaking, if the amount available in securities premium reserve is not sufficient, Then we will make use of capital reserve, account debit. Then in case if these two are not sufficient, then we are going to make use of the amount available in statement of profit and loss to discount on issue of debentures account. Discount on issue or loss on issue. So, narration will be discount on issue or loss on issue written off to against securities premium reserve or against reserves. Let us put it this way, because we will be having securities premium reserve as a primary source. If security premium is not sufficient, we are going to make use of the capital reserve. If these two are not sufficient, we are going to make use of statement of profit and loss. You may have a doubt, what if all these balances are not there? On the whole, from the total reserves and surplus, the amount will be deducted. That's why I told you that it will be reflected in the financial statement as a deduction from the reserves and surplus. It will be shown as a negative balance. So even if all the balances are not there, still the discount on issue of debentures will be subtracted from the accumulated reserves. If the accumulated reserves are also not there, it will be shown as a negative balance in the balance sheet of the company. This is how it will be treated. When we are preparing the discount on issue of debentures account, discount on issue of -% debentures account, we will have 2-% debentures account, the amount of discount. Please visualize the journal entry. Debenture application and allotment account debit. Discount on issue of debentures account debit. 2-% debentures account. Then for writing off, what entry are we going to pass now? Securities premium reserve account debit, or general reserve or capital reserve account debit, or statement of profit and loss debit to discount on issue of debentures account. So on the credit side, we will have securities premium slash capital reserve slash statement of profit and loss, and it will be closed in the same year. There will be no balance at the end of the financial period. The discount account will get closed automatically. We shall now go to the preparation of loss on issue of debentures. Though the accounting treatment remains to be the same, there may be a mild variation in the preparation of loss on issue of debentures account in comparison with discount on issue of debentures account. So, let us now prepare loss on issue of debentures account. Loss on issue of -% debentures account. So, there we had one debit and one credit. Here we will have 2 debits and 1 credit. So, here you will have 2-% debentures account for the discount portion, 2 premium on redemption of debentures, loss portion by securities premium reserve account slash capital reserve slash statement of profit and loss. So here we are going to bring in discount on issue of debentures and the premium on redemption of debentures under one roof. But please remember, we are not going to carry forward this loss on issue to the financial statement, that is balance sheet. We are going to write it off during the current year, first with the accumulated reserves, then with the current year statement of profit and loss. So this is the concept of writing off of discount on issue of debentures. Now we shall be starting with numericals of this particular chapter. Namaste.